Blog Talk Radio, the world's largest online radio network.
Good morning, investors and traders. Welcome to TechnoTrader Radio Live with Martha Stokes, CMT. And now, here's Martha.
Good morning, everyone. It's great to be back after a long holiday. I'm sure you're all feeling a little tired, but also some of you probably feel very rested, and it's time to get busy for the fall activity of the stock market. The fall rallies tend to be the strongest and tend to go into January and February when they do occur, and we are expecting one this year. But first off, we're going to have our September rotation going on, and that's to be expected. A lot of the big funds tend to rotate the stocks, and what they're doing is adjusting their portfolios, moving out of stocks that they no longer feel are going to grow as well as they want them to, or perhaps they feel the company has reached market saturation with a product, or it's underperforming in some way that they don't like, or they need to adjust their portfolio in another way to meet charter requirements. They do have requirements. They have to hold certain stocks, and they have to hold certain percentages of stocks in a lot of the mutual funds and pension funds so that they follow their charter. So there's a lot of activity going on. They have been buying in August and early July and later July. So we did see a lot of quiet accumulation, which is common during the summer, and most investors and retail traders miss this entirely, thinking that the market is very dull because they follow the indexes, when they really ought to be paying attention to what's going on with the institutions and what the institutions are buying or selling. We also saw a big influx of money flow into mutual funds. Standard conventional funds saw a huge surge of activity coming in there. So right now they'll be adjusting their portfolios, analyzing some quantitative analysis and some of their portfolio strategies and adjusting things out. They'll be selling some things, rotating out, maybe just lowering their total outstanding shares and that type of thing. So September is that kind of month. Once in a while it will have a strong rally, but most of the time it is the month where adjustments are made by the big funds so that they can prepare for the end of the year. And they want to get postured now, because when the fall rally comes and the smaller funds catch up and start chasing, and the high frequency traders start chasing, and you, retail traders and retail investors, you are on the retail side of the market. That's what they call you. The professional side of the market calls you retailers. They don't call you Main Street, and they shouldn't call you Main Street. They should call you retail traders, because that you are on the retail side of the market. And remember that when you're trading with an online broker, something that you must always keep in mind, whether you're trading with Forex, stocks, options, whatever, the SEC did a study last year, because the New York Stock Exchange has been complaining that they have been losing volume. They've been losing activity, and they're very disgruntled about it. And there's been a lot of talk about, oh, it's the dark pools, it's the dark pools. It's not the dark pools. The dark pools only account for 7 to 9% of the market activity off the exchanges, and sometimes it surges a bit. But also, the exchanges have their own dark pools, so they're not losing it from that. What's happening is, for all the retail side, the online brokers are buying up stock. And so instead of going onto the exchange, you end up trading against your broker, and your broker is filling your orders out of his inventory. 99% of the time, that's what the SEC has discovered. So they're making some changes, and I'll talk about that at a future radio show so that you can understand what's going on the retail side. Today we want to talk about Groupon, and it's a very popular place for consumers to get fabulous discounts, anywhere from 50 to 90% off of services or products. It just sounds like an awesome deal. All the consumers are rushing to buy things from Groupon, and they're all excited, and Groupon IPOd, and it tanked. It went down and down and down and down, and it's just been doing miserable as far as a stock. And if you bought the stock, you're probably wondering, is there any hope for this stock? Is it ever going to turn around? Should you sit on it for another 10 or 15 years, or should you walk away from it? When you buy an IPO, you have to remember one hard fact that most retail side people forget. Whether you're a retail trader or an investor, small investor, or working with AAII or any of those independent retail side of the market, is that the stock market isn't a casino to these people. It's not a gambling mode like you perceive it to be. It is the premier. It is at the top. It is the business of businesses. So what matters most to the professionals is business. What is business going to do? They don't care much about all the political falderall. They care about business. Is the business going to grow? Does it have a new product or service? Is that a product or service that consumers, small businesses, and big businesses will want? Does it have strong management? Does it have a good business plan? Does it make sense? Because it doesn't matter how much consumers love a company. It doesn't, because people love Groupon, and it is tanking. It's down to around $4. Its all-time high was 25 not that long ago. It's been out there for a little while, but it's really doing badly. If I look at the charts and see what's going on with the charts, I would say this thing looks like it's not going to improve anytime soon. There's a lot of small funds selling right now in panic. You can see that on the chart. Low volume activity is around $4.06, and there's no bottom in sight. It just keeps falling and falling and falling. So what is wrong? Because I ran into a couple over a weekend. I stumbled upon, and I don't really run into people very often that use that kind of super discount because I'm usually doing different areas of things. And so I was very fascinated because this couple, young couple, had bought a Groupon coupon for one of the cruises that are in our area, Seattle area, and they were so excited to be able to get such a huge discount on this cruise that would take them up to Victoria. And this is a big deal in the Pacific Northwest. Everybody loves to take the cruises to Victoria, Canada. And they were just thrilled with Groupon. They loved Groupon. They used it all the time. They bought all these things. They had great. I asked them one very candid question. I said, now that you know about this company and you had a great time on this cruise, would you go back to the same company and buy this cruise again? And they just stared at me. And I said, okay, let's talk about your other Groupon purchases. Are you ever going to go back to any of those companies and buy any of their products or services? And the young woman became very flustered and started stammering. Well, I wouldn't have known about the company if I hadn't been introduced to them on Groupon. And I said, great. But are you going to go back after you've had this incredibly huge discount and buy something from that company? And she was very flustered, and she just stammered around, and she wouldn't answer me. And I said, okay, the answer is no, right? And she kept saying, but I was introduced to the company through Groupon. And I said, so what? If you're never going to buy anything else from that company, if your sole purpose of going to Groupon was simply to get a super big discount, where the company is actually losing money every time it sells this product or service to you, the cruise is losing money. So hundreds and hundreds of people are taking advantage of the Groupon cruise, and the company is losing money every single time somebody buys that. I said, do you see what's happening? And she looked at me very confused. And she kept saying, but I wouldn't have known about this company if I hadn't gone to Groupon. And I said, that doesn't matter. And so herein lies the problem with Groupon. Would any of you go to work for a company and work for free? You might volunteer your services. All of us do have an opportunity. I do a lot of volunteerism, have all my life. It's part of being an important, being a community, doing things for your community. But could you make a living just not making, or making very little money? If your boss came to you and said, well, we're going to go on Groupon and we're going to discount 50%, so I need all of you to discount your payrolls by 50%. Would you go for it, or would you be absolutely furious? The problem with Groupon is they're asking a lot of small businesses, and they're mainly going after small businesses, which are very vulnerable to a lot of schemes and hypes and a lot of things because a lot of the entrepreneurs aren't very experienced, or even if they are, they're isolated in their own world. They're so busy. They work 80 to 100 hours a week, and there's never enough time in a day in a small business. It's just overwhelming all the time. And so Groupon comes along with this sales pitch and says, if you discount this, you'll get all these people, you'll become well-known, everybody will know about you. But that's not what's happening. People are coming to Groupon for one reason. They're coming because it's a super, super discount. But the little companies are losing money, and some little companies have actually been put out of business by Groupon because they didn't have a good business plan or a business structure, and Groupon convinced them to undercut themselves to sell it at a loss. No business can sell things at a loss. Even if you only have a 10% gross margin, you'll go out of business. Companies need very high gross margins in order to be profitable, in order to survive and grow. You cannot rely on a very low profit margin. I know that some retailers who have massive sales capabilities like Walmart, they have a very tight profit margin, but they sell so much, they sell quantity. So you can be a discount house or you can be a quality house, is basically if you're retail. And if you're a discount house, you have to be able to sell enormous quantities to make up the deficit from having a very narrow gross margin. And so that's something that you really need to think about. As we move forward, more and more Americans have taken on a lot of the buying patterns of internationals, of other countries, other areas in the world where they barter and negotiate. The Asian world is very much like that. They barter and negotiate, but they also start at a much higher price knowing they're going to barter down. Well, a lot of American companies that are little companies, small companies, the ones that contribute 52 to 55% of all the jobs in this country, don't really understand that. And so they go and Groupon signs them up and they sell all this stuff, they lose a lot of money, and nobody comes back. And that's the main problem with Groupon is not taking care of its customer. Its customer is not the consumer who's buying the discount coupon. Its customer is the small business owner who is trying to use Groupon as a way to make themselves well-known, to name brand, and to expand their markets. And if you don't take care of your customers, you will go out of business. And that's what's happening to Groupon. Everybody's looking at this, and we have, let's take a look at the outstanding shares of Groupon. Groupon has a total of 651 million outstanding shares. That is way too many outstanding shares for this company. So already they have a diluted share situation from the get-go. So you have all the underwriters, all the preferred customers, all the preferred funds that have bought Groupon and then started selling it off the top because they wanted to sell it to smaller funds and retailers like they always do. And so the stock has just been plummeting because there's all this outstanding shares, way too big for an IPO, way too many outstanding shares, huge, totally ridiculous. Institutional ownership is about 50%. So 50% of the outstanding shares are held by retailers. Retailers have a tendency, especially small investors, to buy and hold, and so you're sitting on it and waiting. And when I look at the list of institutions who are holding in the top 10, I only see a couple really large ones, and I know that a couple of those are the underwriters. So, the one, Fidelity, who bought early, has been selling regularly and consistently and been rotating out, so they were probably a preferred. They probably got this stock for a good price. It went up, and now they've been trying to selling and make profits on it. So what you have is a lot of smaller funds in this stock, and they often make a huge mistake. So it has about 158 funds, mutual funds and sell-side funds and pension funds holding. And so there's a lot of problems going on with this stock. And even at $4, the question is, okay, can this company make some money? So let's take a look at the income statement. Now we pull up the income statement, and we can see that over from 2009 to 2011 and into this year, they lost a ton of money. Every year they are losing quite a bit of money, and it's accelerating, a little bit lower. And if I check quarterly, I can see that revenues have been growing slowly. They're not growing exponentially. They're growing modestly. But what I see that really is disturbing to me is that they have an extraordinarily high sales and general and administration costs. So they're spending an enormous amount of money selling the concept of Groupon. And then they haven't done any research and development at all. They put no money into that this year at all. Big mistake for an internet-based company like they are. They always need to be doing R&D and improving and enhancing what they've got going. So there's a huge problem there. And yes, they did make a little bit of profit on the second quarter, but the selling continued. Now, why would they make a little bit of profit and still sell down? Well, because sometimes you have to be aware that you can take an expense and move it to the balance sheet. You can treat it as an asset. And that's a lot of times what companies will do is they'll take and they'll move some things to and consider them an asset rather than an direct expense. It doesn't look like they really did that here, but there is a no faith in Groupon as a business. The business structure is totally flawed, and that's what we're seeing with a lot of social media. Social media either has a whole lot of customers like Facebook who pay absolutely nothing, or they have customers like Groupon who are paying a lot of money to Groupon and then selling a Groupon discounts. But Groupon is not guiding or helping their customers. They're taking advantage of them, actually, because the small business is putting a lot on the line, hoping that it will actually expand its marketing base, expand the number of consumers that know about it, and expand its reputation and its name branding. And that's not happening. People are coming into Groupon, using the coupons, and then walking away and never buying, and never ever going back and buying anything or very little from the companies. And these little companies are discounting so greatly that they lose such an enormous amount of money that it puts them at risk, and they struggle, and many are going out of business. So there are several flaws in the Groupon business plan. One, a business needs to manage its cost of sales. They're not doing that. A business needs to take care of its customer base. Its customer base is not the consumers that come to Groupon to use the coupons. Its customer base are the small companies who put their coupons up on Groupon to sell, to become name branded or popular or expand their marketing. And they're not taking care of their customer base. If you don't take care of your customer base will go away. It will disappear. And that's what's happening with Groupon. A lot of them are disgruntled, or they're going out of business, or they're leaving because it isn't working for them. And one of the big problems with Groupon is the discounting structure is extremely steep. It's too steep. It doesn't take into the consideration that you have to make a profit even when you have an item on sale. Now, any retail store will have what's called a loss leader, and I'm sure all of you know about what a loss leader is. A loss leader is being sold for less money than what the store paid for it. But when they get you in the store to buy the loss leader, like in a grocery store, let's say they put milk on sale, or they put chicken on sale, or they put steaks on sale, or whatever they put on sale. When you go into the store to buy that steak, you're also going to buy a baked potato, you're going to buy some milk, you're going to buy some fruit, You might buy salads, you might buy cereal, you might go in, and if it's a department store like Fred Meyer's, and buy some socks and some dog food, and they're going to make it up. And they have a massive, huge quantity. It's a gigantic store, it's a gigantic chain, so they make it up by volume. Same with Walmart, right? Walmart will have lost leaders, will go in, but you will have all these other things that you'll buy as you come out. Very rarely will you go into a store and just buy the lost leader, and they know this. But with a small business, one, you don't have the quantity. You can't have a lost leader because you don't have the quantity of purchases to offset it. And you have to have a secondary product that people will buy. And a lot of small businesses don't understand this. They don't understand that with the lost leader from Groupon, they also need to put in and have a little group of other things that they could sell these people that would make up for the lost leader. So the whole concept is that Groupon doesn't understand small business. It isn't taking care of its customers. It isn't working with the customers to help them be prosperous and have things work for them. They're just signing them up. And so Groupon's sales expenses are going through the roof because every time they turn around, they have to call somebody, new small business, and get that new small business to come on board. They're not able to nurture and help their customers. And so that's a huge, huge problem with a lot of the social media, is that the social media people are fixated on free, cheap, discount, that type of thing. But the world isn't free. You don't work for free. People don't work for free. So your products can't be free. Products can't be so discounted that the company can't make a profit. And one of the big things that a lot of small businesses don't pay attention to is this. When you hire somebody as a small business owner, all good business plans take into consideration that every single employee is going to cost a lot more money than the actual payroll cost. If you pay somebody $10 an hour, the actual true expense for the company is $30 an hour. That's probably hard to swallow if you're a wage earner, but that's the reality of it, because each person has to have a place to work. Each person has to have a telephone. Each person has to have a PC. Each person has to have health care. Each person has to have payroll taxes that the employer pays, liability insurance, L&I insurance, unemployment insurance, and on and on and on. And no matter how much education you have, there's on-the-job training. Every business has to train you specifically for your job. Even if you come right out of college with a master's degree in business, you're going to be trained by that company, and that's very expensive. So over time, employees cost a lot of money, and it's important that small businesses understand this. And I think that's one aspect that also that Groupon is not really totally connected with, that they really understand it. When I look at the problems with Groupon, I would say that management is not in touch with how their company ought to grow and perform, how their customers relate to them, and to how their customers relate to their customers, the consumers. So I would say that Groupon gets a bad mark for not really having good, strong revenues. It gets a bad mark for having too high a cost in sales, not controlling the cost of sales. You have to control the cost of sales and advertising. You can't just go off the wing. They have a very bad cash flow problem. I would say that they have some real management issues. I think that management doesn't really get small business, and if you're going to sell to small business, you have got to understand small business and how it works and why it works, and what the major concerns are, and how much gross margin a small business really needs to make. You could turn this whole thing around if you were to change just a few things. First of all, Groupon really has to consult and work with the small business that is signing up with the coupons and help them succeed. Do more than just offer cheap coupons like the young couple that I met, where they were just using Groupon to just get super good deals, but they had no intention of ever going back. And that's what's happening with the majority of people that use Groupon. They're just looking for a cheap deal. and they're not thinking about the fact that these companies can't just continue to do this. They're not Walmart. These are small businesses. These are little tiny companies. If Groupon went after huge companies, and perhaps they do because I really haven't gone into their website, but my understanding is it's all pretty much small local businesses, they might have a different story. But Walmart wouldn't do that because Walmart has its own way of marketing and has its loss leaders connected and tied to other things. So in order to really pull Groupon up, you need to get some management in there that understands small business. You need to get some consultants in there that actually consult with the small businesses and help those small businesses that are trying to use Groupon as a way to leverage into more marketing areas, to expand their brand awareness, to expand their basic consumer base, and how to do it profitably. Not just set out a coupon for 80% off of something or a free dozen donuts for anybody who comes in the door, but also that if you have a loss leader, that you have to have something behind it that the people pay for, to pay for the loss leader. And that you have to work with these small businesses and help them. And help them, guide them, and give them ideas of how they can make profits out of this. It's not just enough to put a coupon up and have a super discount, have people all use the coupon and then walk away and they never come back to you. It doesn't work. That's the single biggest problem with Groupon. It's great for consumers, but it's going to go bye-bye unless somebody gets in there and really connects to small businesses and turns Groupon's management around and makes them realize that they need to totally change their structure of how they're doing this. It's not super discounting that's going to make loyal customers. Loyal customers come from having a quality product, from having quality service and support, from really going the extra mile and having something unique and different. If there are 5 donut shops in a half-mile radius, this donut shop that has the most unique donuts, that has the best service, the happiest, smiliest faces, and the best coffee is going to be the one that actually succeeds. Even if their donuts are slightly more expensive, people will go there because they're more concerned with service, quality, and originality or something unique and different than they are just super cheap. A lot of people like to get super cheap, but they never go back to the company that has offered it on Groupon. So we have a dilemma because people have become so accustomed to the idea of, well, I want a super discount. But people who really understand business and understand things realize that if they get a super discount, they're not going to get the service. The product isn't going to be that great, and they're probably not going to return to that company. And that's the other problem, is that you have discount houses in retail and you have quality houses in retail. And those people who buy quality products, quality services, can't be bothered with the discounts because they know that it's cheap, it's going to break, or it's not going to be that good, or it's so-so, or it's just something to get by. It's cheap. And that is a problem for a lot of the small businesses. They may have a quality product or quality service, but they cheapen it by discounting it out in a super discounted way, and people do not appreciate that it has the value and the quality that it truly has. So I would recommend people not use Groupon, but to go in another way, in another avenue, and try something different. Now, what I hope to see soon is some version of Groupon that is really different. Somebody that comes out and really understands that, yes, this is a great way to promote small businesses, but the small business has to make money. It can't send out lost leaders. It has to always make money. They don't have the margin, they don't have the capability to take a lot of losses and hope that people come back. So you need to have some way of offering something out to people, but the small business has to make money on it too. And I think that consumers couldn't really understand this because you work and you want to make a good wage. You wouldn't want it if your boss came to you and said, well, I'm sorry, we're going to be doing everything on Groupon in the future or Facebook on the future, so I have to cut your wage by 50%. You wouldn't tolerate it. So you have to understand that the companies have to make money. And I think sometimes consumers have forgotten that. And if you discount too much, then if you're a quality house, that just throws your quality value out the window. A quality house will always sell based on its service, its products, its integrity, its reputation, the quality of the company, as well as the quality of the product and service, and they don't need to discount greatly. So a lot of small companies are hurting themselves by discounting hugely on Groupon, not realizing that that's not the way to go and it's not going to be successful to them. So I think that Groupon is going to probably bottom around, it may fall to $3 or $2. The biggest problem with Groupon right now is that it's a NASDAQ-listed stock, and you have to meet certain criteria to remain listed. You have to make a certain amount of profits. You have to be in a certain price range. If it falls below $1, that's a big problem. There's a lot of criteria that you have to meet to meet listed requirements. And if it moves to a bulletin board or over-the-counter stock, then it really will be a problem. So you have to ask yourself, if you're owning Groupon, if you own it right now and you bought at 25, there are an enormous amount of hurdles for this company to overcome. It is not really truly turning itself around yet. I'd say management is the number one problem. I'd say sales costs are number two, and then also right up in there as well is how their customer base, not understanding their customer base's needs and how they need to help their customer base be profitable. This is a lesson that a lot of online brokers are learning for you retail traders and you small investors. A lot of brokerage firms have been just selling you stocks. They sell right out of their inventory. They charge you more. They're charging you within the price range, within the bid and the ask, but they're catching a lot of slippage. They're making a lot of money off of you. They're giving you mediocre educations, or they're getting you all riled up with strategies or gimmicks or get-rich-quick schemes, and you keep losing money. You keep losing money, and you keep losing money. And this is not good for the retail side of the market, and it's not good for online brokers or online charting services or whatever. The retail side needs to learn and understand what it takes to be successful, either for investing or for short-term retail trading. And this isn't something that's just you're going to get in a get-rich-quick scheme or some fast weekend seminar or whatever, or some online webinar. Is not going to teach you what you need to learn. One of the reasons I came out of retirement was because I got pretty fed up with the idea that so often the retail side is just given all kinds of false information and things that just are not true. And you have to remember that just because you read it on the internet doesn't mean that it's a truth or a fact. It's oftentimes just an opinion. So be careful what you read and what you study, and make sure that you check empirical evidence to confirm what's going on. Right now, Groupon has no bottoming formation. It is not basing. It is not doing anything else. It is starting to shrink a little bit as far as downside price action, and volume is very low, so it's probably coming close to its bottom. But I would not expect a recovery anytime soon. You may be talking many, many months to many years, or not at all, unless a whole lot of things change up in the board of directors, the officers, and they took a hard look at what they're doing, and to make sure that they can change their whole business structure. Their whole entire business plan and strategy just doesn't work, and they need to do something soon. Otherwise, they will be facing some extremely serious things. And yes, companies do go out of business. This has a huge number of outstanding shares, which is a big negative in getting this stock to move up. The more outstanding shares you have, the slower the price is going to move. And so you have to be very aware that huge outstanding shares for a tiny little company is a very, very bad thing, especially for a young IPO that's not very old and is still struggling and going on. Social media has been a huge disappointment to the stock market. The business plans don't work. The big funds don't like the business plans that are presented. They don't like the approach of the social media, and I expect that most of the social media are going to be dismal failures as far as stocks go. They're just not getting the attention or the interest from the giant funds who really dominate and control the marketplace. What is still getting tons of attention, and we're seeing all kinds of activity, is cloud technology. And I talked about that several months ago on one of my first broadcasts, was cloud technology, how it's taking off. I've been talking about it to my students for several years now. It's a very important new technology. All of the new jobs that the government is, whatever side you're looking at, is bragging about, is all coming from cloud technology: computer programming, computer software development, computer hardware development, data storage, and on and on and on. Security for computers. We're also seeing a rise in pharmaceutical jobs and high-tech jobs. All the high-tech jobs are coming out because cloud technology is making it possible. We're changing up, and this is a displacement technology that is booming. It's become quite speculative right now because that's how it goes. We'll see some huge growth and some companies that are just going to be stellar stocks to own for a long period of time as this cloud technology takes off. It is underway. It is at market introduction to market acceptance in the long-term product cycle. So it has a long, long ways to go to reach market saturation. So there's many years ahead of good, strong growth in this industry. And I do believe that this is the industry that will pull us out of the economic slump, and will make far more jobs if you have the training. The big problem we have right now is there are tons of technology jobs available, tons of programming jobs available, and nobody to fill them because nobody has the education. So if you've got kids in high school or young adults in college, you need to help them become aware that the cloud technology is where a lot of the new jobs are going to be coming. And they need to pay close attention to those because that is where everything is going to happen. Social media, I think, is an experiment like the blogs, and will fade over time and become less and less popular. There is some communications going on in some things, Twitter and Facebook and that type of thing. But even now, more and more of that is being used by business, and individuals are using them less and less unless they're following some big star or some Olympic champion or whatever. But they have as far as a business plan goes, most of these fail dismally in terms of having a solid business plan that the institutions can say, yes, this makes sense and we can invest in this company for the long term. So this is what we're facing with all of these social medias. Groupon and Facebook, I've talked about, both of them are looking pretty sad, and it doesn't look like they're going to improve anytime soon. So that pretty much wraps it up for this week's radio show. I'm going to be talking to you next week. And until then, take care, trade wisely, and always know whether the news is hype or fact. I'll talk to you next week. Goodbye.
Blog Talk Radio, where millions of hosts and listeners gather.
Mind whether you're trading with Forex, stocks, options, whatever. The SEC did a study last year because the New York Stock Exchange has been complaining that they have been losing volume. They've been losing activity, and they're very disgruntled about it. And there's been a lot of talk about, oh, it's the dark pools, it's the dark pools. It's not the dark pools. The dark pools only account for 7 to 9% of the market activity. off the exchanges, and sometimes it surges a bit. But also, the exchanges have their own dark pools, so they're not losing it from there. What's happening is, for all the retail side, the online brokers are buying up stock. And so instead of going onto the exchange, you end up trading against your broker. And your brokerage funds tend to rotate the stocks, and what they're doing is adjusting their portfolios, moving out of stocks that they no longer feel are going to grow as well as they want them to, or perhaps they feel the company has reached market saturation with the product, or it's underperforming in some way that they don't like, or they need to adjust their portfolio in another way to meet charter requirements. They do have requirements. They have to hold certain stocks, and they have to hold certain percentages of stocks in a lot of the mutual funds and pension funds so that they follow their charter. So there's a lot of activity going on. They have been buying in August and early July and later July. So we did see a lot of quiet accumulation, which is common during the summer, and most.
Blog Talk Radio, the world's largest online radio network.
Good morning, investors and traders. Welcome to TechnoTrader Radio Live with Martha Stokes, CMT. And now, here's Martha.
Good morning, everyone. It's great to be back after a long holiday. I'm sure you're all feeling a little tired, but also some of you probably feel very rested, and it's time to get busy for the fall activity of the stock market. The fall rallies tend to be the strongest and tend to go into January and February when they do occur, and we are expecting one this year. But first off, we're going to have our September rotation going on, and that's to be expected. A lot of the big, once in a while it will have a strong rally, but most of the time it is the month where adjustments are made by the big funds so that they can prepare for the end of the year. And they want to get postured now, because when the fall rally comes and the smaller funds catch up and start chasing, and the high frequency traders start chasing, and you, retail traders and retail investors, you are on the retail side of the market. That's what they call you. The professional side of the market calls you retailers. They don't call you Main Street, and they shouldn't call you Main Street. They should call you retail traders, because that you are on the retail side of the market. And remember that when you're trading with an online broker, something that you must always keep in, investors and retail traders miss this entirely, thinking that the market is very dull because they follow the indexes, when they really ought to be paying attention to what's going on with the institutions and what the institutions are buying or selling. We also saw a big influx of money flow into mutual funds. Standard conventional funds saw a huge surge of activity coming in there. So right now they'll be adjusting their portfolios, analyzing some quantitative analysis and some of their portfolio strategies, and adjusting things out. They'll be selling some things, rotating out, maybe just lowering their total outstanding shares and that type of thing. So September is that kind of month.